Hello, good morning and welcome to ET Now. You're watching Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karanya Rao. Let's take a look at the headlines for this morning. The hope rally in the US continues. We had a decent global handover. However, futures were trending slightly negative this morning, and that's what's perhaps led to a slight break for the Nifty. However, with all that being said, we're still at 13,300, just about. Pharma, PSU Bank indexes are leading the gains, but we'll talk more about that in just a bit. Top Nifty Gainers, we have ICICI Bank post that analyst meet on Friday, really leading. It's at a 9-month high. Focus will be on ROE enhancement. That was the key takeaway from the meeting. Stock has been really active. Apart from that, we also have Goldman Sachs retaining a buy call in Adani ports with a target of 465. They see a very good hike coming in there. So two stocks mainly in focus, Adani ports and then ICICI Bank. Then talking about something that's just a little more general, white good prices are set to hike by 15 to 20% on rising input costs. So that's also something to keep an eye out for. Then we have IPO Street for you. Burger King's total subscription last week ended up at 156 times. That's more than Happiest Minds, more than Route Mobile. It's the 14th IPO of this year and the second most subscribed IPO, only after Mazagon Dock Shipbuilders. We then have Angel Broking, saying that November's overall average daily turnover was up 416% versus a year ago. That stock has been on a tear. It's at 52-week high, and now it's really done well since its listing. That was not too long ago. Let's get you a feel for how the markets are faring before we give you our quiz question. Like I said, we are nearing 13,300, so that's a fairly positive sign given that global futures are tending slightly negative right now. It's still 0.3% higher for the Nifty. The mid-cap index clearly outperforming. Broader markets really now firm footholding in the market, over 1% higher this morning. We have the bank index just about green and the auto index that slips slightly into the red. In terms of what's winning, we had Adani ports like we just mentioned. Then we have a UPL making a good comeback after PI actually overtook it as India's most valuable company last week. Valuable agrochemical company, please note. Then we have Sun Pharma, Dr. Reddy's, two pharma pack heavyweights really leading the upcharge, and you have an ONGC that's been performing quite well over the last 2 weeks or so. On the losing side, we have two heavyweight financials, HDFC Bank and Kotak Bank, both down over 1%, HDFC nearly 2%. Nestle also sulking today, 1.3% down. Hindalco post that sharp up move we saw last week, cooling off a bit, 1% down. And then you have Hero Motor also about 1% down. So breadth still in favor, 32 versus 18 advancing. But as of now, we can't really call it a bullish day like we were seeing in the previous week. Let's now go across to my colleague Jayesh, who's standing by, because Indian markets have outperformed all their global peers in the last few months with an FII inflow of $17 billion. Jayesh digs deep into the numbers and brings a comprehensive comparison of the performance of global markets after COVID. Let's listen in.
The recently concluded quarterly earnings season showed some signs of encouragement as far as revenue and profit growth are concerned. What it has also done is a lot of analysts have started upgrading Indian equities. And as a matter of fact, the Nifty has seen a 10% EPS estimate increase ever since the start of this quarter. So, definitely showing some signs of momentum as far as earnings picture is concerned. The other indices that have seen some bit of upgrades come about from them would be the DAX as well as the S&P 500. As far as downgrades are concerned, Russia and Brazil really stand out over here because they have seen a 2% and an 11% downgrade in terms of earnings ever since this quarter started. Now, as they say that the market is a forward-looking instrument, and that's exactly why if you have a look at the market performance, India has been the rank outperformer in terms of its equity performance. The BSE Sensex has managed to surge more than 30% in the last 6 months, followed by the Nasdaq as well as the Kospi, which have surged more than 25% each. On the flip side, if you have a look at some of the European indices like the CAC, DAX as well as the FTSE, they have been able to return only single digit in terms of their last 6-month performance. Of course, all of this is on the back of some serious money that has been chasing the emerging markets as well. And India among those emerging markets really stands out because it's the only country in Asia which has seen FII inflow on a YTD basis. We have received about $17 billion so far this year from foreign investors, while on the other hand you have South Korea as well as Taiwan that have seen almost $18 billion each flow out of their countries, and then you have the likes of Thailand, Malaysia, Indonesia as well as the Philippines, which have seen about $2 to $6 billion fly out of their respective countries.
Thanks, Jayesh, for that. Let's quickly pull up the quiz of the day. This morning we asked you on our Twitter handle, which capital goods companies is trading at the lowest PE multiple? The options were BEL, Siemens, Hindustan Aeronautics and Carborundum Universal. You still have time to take part. You need to just log into Twitter, follow our handle ET Live and send us your answers in the comments section. Keeping it with the markets for now, let's welcome on board Kunal Bothra as well as Vijay Chopra. Morning, gentlemen. Kunal, coming first to you for your high risk as well as your low risk bet.
So good morning, Karanya. I would suggest a couple of buy calls, specifically, orienting myself towards the mid-cap theme. A lot of the mid-cap stocks are doing pretty. So first one is Adani Rail Industries. The stock, I discussed the stock, I think, last week as well on the BNS show. My earlier targets were 135 for the stock. The stock has done exceptionally well from 115 to now 130 plus, almost a 17% jump into the stock price, from the last time. And I believe even at current levels of 130 plus, I think Rail Industries looks good for yet another 15% on the upside. So the stock is in high momentum. We've seen historically that how the stock has performed on the long-term basis as well. So Rail Industries is the first buy. The stock is at 130 odd. Targets to be kept at 145, and stop loss could be kept at 125. The second is a buy on Raymond. Now this is typically a very low beta kind of a stock, so which is why I would categorize this as a low risk trade. The stock breaking above its 200 moving average. We've seen a very strong momentum breakout as well on the stock prices. The last 3 to 4 days, we've seen Raymond, getting back into the thick of momentum. So prices have moved up higher. The volumes are also inching up higher. Today also you're seeing some positive price action for Raymond as well. So that remains to be the second buy. I would place a target of almost 366, 370 range on Raymond. Would suggest a buy with stop loss to be kept at 328.
Okay, well, Vijay is also with us. Hi Vijay, good morning. What are your wealth creation bets from a fundamental standpoint?
Quite a run-up in some of the sectors, and they might take a pause. But I suppose that as we are approaching the end of December, and we might see some kind of a selling from FIIs because they have to, justify their NAVs and whatever investments have come into India. So they would probably try to close their books, and we might see some kind of a profit booking. But again, few sectors really look up. One is pharmaceutical sector. I think Sun Pharma, which is trading at about 586, 585 right now, looks ripe for 600 plus. And if it crosses 600, then 650 is quite imminent. So it's a low risk idea. And pharmaceutical anyway, whenever there is confusion or there is some kind of a correction in the markets, we see the money moving into the safer sectors, and pharma is one of them. Another company which I like is Bata, which is an average risk stock, and the stock has consolidated nicely at lower levels. So presently trading at about 1575, and it can go up to 1650. So this is a medium-term target for Bata. Another a bit of a high-risk idea is National Aluminium. You've seen a steep rise in the stock, although valuation-wise it is still very, very convincing, although it's a Government of India company. But I think that metal stocks are kind of overheated as of now, and we might see some kind of a profit booking. Again, I'm fairly bullish in the metal space and would be so in the next few years. But yes, looking at the market conditions and where the market stands today, seemingly they have topped out as of now, and we might see some correction. But again, this can inch up to 50 rupees. So National Aluminium also looks good.
Okay, great. Thanks for that, Vijay. Some really interesting picks from our guests this morning. So do your own research and perhaps take a look at some of them for investment opportunities. But let's bring up the BNSN stock cloud for this morning. We have a lot of new interesting stocks in there that are going to be active for various reasons. So let's begin with Adani Ports. We just spoke during headlines of an upgrade coming in from Goldman Sachs for Adani Ports, and also a very positive call they recently held with the investor community, targets coming in at least 10 to 15% higher than where it currently trades. We then have ICICI Bank, which also did an analyst meet on Friday. Really positive takeaways out of there. The deposit franchise is growing well, and we'll be bringing you more on that later in the show. We then have ONGC, which has discovered oil in Colombia. Rarely happens, but they have a block in Colombia, and they've actually hit oil recently, so that's a really positive development for them. We then have Tata Chemicals, which has just been on an absolute tear, and any chance you get, Tata Sons has been hiking the stake. They've totally bought around 121 crores worth of stock recently. So that's Tata Chem. We then have Tata Power as well, which is doing well on the back of the news relating to the power initiatives. We have Bharat Dynamics. We have an Hpcl who was on the channel this morning talking about the outlook for fuel and where we stand there. We have Raymond, ADF Foods, and then GCPL also, that are all now firmly part of the possibly reopening trade. So that's the cloud for this morning. Let's now come back and address our viewer queries with our guests. And our first query this morning is from the line of a Tushar Diochakke. I believe he's written to us before. Thanks for being such an avid participant, Tushar. He's been looking at banking stocks, and he seems to have made some money over the last 8 to 9 months. And he's basically asking if he should be booking profits right now or continuing to hold, possibly even adding. So Kunal, coming to you first, within the bank Nifty and the higher quality banks, where do you recommend Tushar should look at placing a bet? And if he's been invested for the last 8 to 9 months, is it possibly a good time to exit?
Well, it depends. Now, if it's very, very short-term oriented, then possibly yes, you may book out maybe 30% or 50% kind of a target or profit from the holdings which you have. But then, if your horizon is long-term, the only reason why I'm a bit this thing iffy on the short-term charts is because the short-term indicators for many of the banking stocks have gone into a completely overbought zone. So, for example, HDFC Bank at 1400, 1440 levels. The stock had gone to an overbought territories, and now you've seen the stock cooling off from 1440 to 1370. And now similar is the prospect for many of these large cap banking names. So it depends purely on the time frame. If it's specific towards short term, then I believe you can book out partial profits over here. But if it's quite a medium term to longer term kind of a time frame, then I would suggest that you should hold on to your investments over here. I believe that there are many large cap private sector banks like an ICICI Bank, which is relatively now playing a catch up again. So compared to HDFC Bank and Kotak Bank, ICICI Bank had relatively underperformed, but now you're seeing a decisive catch up. So last week also you saw on Friday this being one of the major private sector banks which plans to move or get back into the leadership kind of a tone. Today also in the first half of at least the first couple of hours of trading, you saw ICICI Bank leading from the front. So I think in that regards, there could be a possibility that you might see ICICI Bank taking the charge at least in the very near term. So if you can even do some bit of adjustments to your portfolio, maybe book out profits, some bit of profits from HDFC Bank or Kotak Bank, and then shift to ICICI Bank, that could also be a reasonably good strategy for you. So it depends on your time frame. If it's very, very specific towards short term, then you can't book out partial profits over here. But if it's long term, then I believe some churn is advisable at current levels.
Right. Okay. Vijay, how are you analyzing the banking space? And given the very specific question that Tushar has asked us, what would be your view?
Suppose that there have been pockets of excellence, and there would be more. And I completely concur with Kunal when he says that the ICICI looks good. When I'm looking at banking charts, there are a lot of golden cross formations in several charts, and ICICI is one of them. So I would recommend that there are other stocks like SBI, Federal Bank, Canara Bank, Bank of Baroda, the top rung PSU banks. These look good with a medium to short term perspective. And I think that even the larger banks like Kotak, HDFC, although they have run up quite a bit, but there might be a breather. The money might shift into either mid caps or quality large caps like ICICI. But yes, I would say that, PSU banking index seemingly looks good, and PSU stocks like SBI, Canada, BOB, they are excellent. There are stocks like Federal Bank and IDFC First. These banks are also showing some shoots of growth. So I would say that, probably we can shift into quality mid caps as of now in banking. And if money lies in the large cap banks, I think that, you should pull out and book profits there. And I'm sure that banking should do well in the coming years, because it has been a laggard, so to say, in the recent past. So again, I've told my picks. I think that banking should do well. PSU banking, tops my list.
Okay, all right. Then moving on to query number 2. This has also come to us via Twitter. Mr. Prabhakar has written to us and he says he's bought 700 shares in Panacea Biotech. His buying price has been 255 rupees per share. So wants to understand whether he should continue to stay invested here or should he sell and perhaps look at any other name within this space. Kunal, right now the stock is trading at about 220 rupees odd level. What would be your understanding going by the charts? Does it merit to stay invested here?
Well, looking at the charts, it seems that it's a very recent kind of a purchase, because I think just 3 or 4 days back, was where the stock had tested that 255 260 zone. I think the last time the stock had been into this territory was, I think, 5-6 months back in the month of June and July. So I'm assuming that it's a very recent kind of a purchase. Also, I think when the stock had hit that 260 mark on both the occasions, whether it's June, July, or whether it's the last few days, on both these occasions, you saw the volume spring up quite strongly, which means that one thing is very clear, that there is demand which is chasing the stock prices. So whenever you see stronger demand coming into the stock price, in terms of volumes, the stock tends to see a strong price activity. Now that could purely be one of the major indications that the trend is restarting for the stock price on the longer term chart. So it's possible that the stock may take some bit of more time to try and consolidate, because the average volumes also have to move up higher. These sudden bursts of volumes play a part where it helps the stock move from a lower range to a higher range. But then for the stock to move up higher and start into a trending kind of a fashion, you need sustained increase in average volume. So I think if we see that phenomena happening for Panacea Biotech, then you should see the stock going into gradual uptrend. As of now, I would suggest a hold. Keep on watching the stock. If you see one more round of volume upside and the stock breaks above this 260 to 65 hurdle, this could be a big breakout for the stock, which could probably catapult the stock even to a 300 to 330 kind of a zone. So I would suggest a hold to the investor as of now.
Okay, thanks for that, Kunal. Vijay, what about you? What's your take on a Panacea?
Time where we'll see a lot of action in the large cap, pharma large caps. So no point of being in either small cap or micro cap companies like Panacea. So I would recommend that you are probably getting back your money. So shift to the likes of Lupin, likes of Dr. Reddy's, and likes of Sun Pharma, as I mentioned earlier. Glenmark looks wonderfully good on the charts, and there has been some kind of a buzz around its some stake sale in the company. So I think that be with the large caps, Lupin, Glenmark, Sun Pharma, Dr. Reddy's, these are the stocks to be in the pharma space. And with a lot of buzz around the vaccine, I think that the major beneficiaries or these companies would do something. They would definitely contribute towards the vaccine in some way. So, even Cadila and Cipla look very good. So be with the top 5-10 companies in pharma space. No point of being in the mid cap space, because we really don't understand everything about, small cap and mid cap companies. So I would recommend an exit. And if you really want to get into pharma, be with the large cap names.
Okay, so that's some prudent advice coming in from Vijay. Just stick with the winners. It's a complex sector. And you can clearly avoid these small cap, mid cap pharma stocks, unless you, of course, really understand the business well. Let's move forward then. Query 3 from Sriram of Chennai. He's bought 156 shares of Ester Industries at 122 rupees per share. What is the 6-month perspective? Kunal, looking at that chart, can you offer Any insights of what he might expect over the next 6 months?
So again, a mid-cap name, a pure mid-cap name, Varun, I think the average volumes for the stock historically have been a bit lower, but it's just that off late, when you've seen the stock picking up price action, you've seen volumes also picking up quite strongly. I think the last 2 months, October and November specifically, we've seen some very strong blowout volumes for Ester Industries. The stock gaining strength from almost the 60 levels where it started off. I think the month of September, October. The stock has almost doubled to almost 120, 125. So, it's part of that mid-cap brigade where, many of these mid-cap stocks have, shown very strong price recovery in the last 2 months. But then the question over here is that if you're buying at the higher end of the range, what if there is a corrective phase? Because, because of the, very short, time frame and a high, expansive price move, there is possibility that whenever the stock goes through a corrective phase, the correction would also be very, very sharp. So, I think in that regards, I would suggest that you maintain a stop loss. If it's purely a trading play, then I would suggest you maintain a stop loss. That stop loss could be closer to 115 levels for Ester Industries, because if the stock breaks that 115 mark, which is a reasonably good support for the stock, then there is a possibility that the stock may even come back to sub 100 levels as well. So I think purely on the short-term charts and looking at the last 2 months or 3 months of price recovery, I would expect that you can hold, but keep a strict stop loss of 115 levels for Ester.
Okay. Vijay, what is your understanding of Ester Industries and what would be your call?
Well, I think exit on rallies would be the call. As I have mentioned earlier, I would reiterate that be with the bigger names. If you want to be in chemical industry or plastics, be with the larger names, maybe quality mid caps or large caps. So I think that, one should exit out of Ester Industries. As I said, a lot has gone wrong with the company in the last 10 months during COVID, and we really don't understand, what is what. So I would say that things which are clearer are, with the bigger companies. So I think that, if you want to be in the chemical space, UPL would be my top pick. And UPL looks very good for a target of 600 in the medium term. So be with the larger names. Ester is a clear exit on rallies.
Thanks, Vijay, for that. Kunal, back to you. Help us understand what is the stock you've picked out this time around for your chart busters, and why should traders and investors be monitoring it closely?
So I've been very bullish on the auto pack. Karanya, we've been having a lot of discussions, on air and off air as well on the auto pack overall. So one of the stocks which I'm highlighting is Bajaj Auto. Now, we've been discussing that how there has been a specific liking towards the leader stocks or the group of leader stocks from the auto pack, where you've seen a lot of demand, a lot of strong price action. But for Bajaj Auto, somehow the stock has not been living up to its erstwhile expectations. But off late, we've seen a very good price pattern breakout for Bajaj Auto. You've seen the stock pattern. There's a rectangular channel pattern formation for Bajaj Auto, where the stock was trading in the last, I think, 4 months from August or end of July and start of August. The stock had gotten into this 400, 450 point trading range, and we've seen the breakout finally for Bajaj Auto about this 3,200 mark. So I believe that this could be a double breakout for Bajaj Auto, because the auto sector is doing pretty well, and Bajaj Auto has been showing some underperformance. With the help of this breakout on the prices as well as on the indicator front, there is a possibility that this stock can cover up major of its underperformance, and could be the other leading auto stock which should show some good price performance. So that's the stock which I've picked up for chartbusters. At 3,200 approximately, I believe that the stock can offer another 15% on the upside for a short to medium term kind of an investment.
Okay, thanks for that, Kunal. And on that note, time for a quick break here and Buy Now, Sell Now. Stay tuned. We'll be back shortly. Hello and welcome back to ET Now. You're watching Buy Now, Sell Now. Let's take a look at ICICI Bank, which is currently seeing a big up move. We've once again crossed the 500 mark and quite firmly touched 513 this morning, and then kind of cooled off a little bit. There was an analyst meet on Friday where ICICI Bank spoke about the future prospects. Basically, in a nutshell, they're going to continue eating deposit market share, and they want to make the base more and more granular as time goes on. So that's going to be the key fuel the bank needs for future credit growth. Then they're really going to up their digital efforts. So digital solutions at the branch level, that's a key focus area. Also analytics to drive better operating profits and cross-sell to customers. So basically they're using the data to see which customers are credit worthy and which customers have the potential to be cross-sold products, right? Now, what is the perfect thing they can cross-sell? Insurance. They already have a huge and healthy growth in the protection space. Look at ICICI Pru, ICICI Lombard. All brokerages are very positive on these stocks. So the idea is to start cross-selling the insurance products to the banking customer base. In terms of what's been achieved by ICICI Bank in the last 3 years, robust liability growth, 2x from FY18 till now, 1.6x operating profit growth, and 1.3x asset growth. So they're really done well over the last 3 years, and according to management, it seems that this trend is definitely going to only continue and get stronger going forward. So the stock is up firmly in trade today. Let's see if we can clock a new high like Kotak and HDFC Bank did anytime in the near future. But leaving aside what bank managements like ICICI have to say about the prospects, let's also listen in to market veteran Saurabh Mukherjee saying that there will be consolidation in the banking space in the post-COVID world. Let's listen in.
Both the private sector banking space, or banking space including PSU banks, and the Nbfc industry is set for significant consolidation, right? And in a way, just like the aftermath of Demon, just like the aftermath of GST, I think the post-COVID aftermath will also be a trigger for consolidation. The obvious aspect of consolidation in banking is the PSU banks ceding share to the private sector banks. I think that's an ongoing process that will probably continue for the next decade or so and benefit shareholders in private sector banks. I think that the bigger call is the Nbfc industry consolidation. Our reckoning is the Nbfc industry will consolidate around, say, a dozen champion franchises, of which we are invested in, say, arguably the strongest of them, Bajaj Finance. But you could argue, you could make an argument for, say, an LIC Housing Finance as well. Where we are still hesitant to invest is, say, one rung below. We're hesitant yet to, say, invest in a Cholamandalam or a Shriram Transport. But I've met other investors who believe that if the CV cycle recovers, Shriram Transport will do well, and they're therefore investing there. Whichever way you cut it, whether you invest in absolutely the elite NBFCs or one rung below, it is, I think, fairly clear that over the next 3, 5, 10 years, the industry will consolidate, much like private sector banking has consolidated. If you see private sector banking, 4 banks account for 90-95% of the industry's profits. I think we'll see a similar phenomenon play out in the NBFC sector. And if I was an 18 now viewer, I'd be positioning my portfolio to make money from that. Whether you buy a Bajaj Finance or an HDFC or an LIC HF is your prerogative, but it would be a shame if you don't benefit from this consolidation. Just like in private sector banking, I'm very, very confident we'll see NBFC industry profitability crunch in the hands of a handful of lenders.
Okay, let's talk about some more stocks that are making the news today and are buzzing away in trade. Adani Ports definitely is the one to watch out for. Goldman Sachs has come out with a rather bullish note on Adani Ports. Vivek is here with the key highlights, and to tell us why is it that Goldman is bullish on Adani Port. Vivek.
Management recently gave a presentation as far as the Krishnapatnam port is concerned. Remember, Adani Ports recently acquired the Krishnapatnam port and now called over the entire analyst community to give an update as far as the operations are concerned. The entire analyst community has come back feeling extremely enthused and is quite surprised at the sharp and quick turnaround that the management has managed to pull off. Now, one of the main highlights has been the fact that the company has committed to undertake a total capex of close to 750 crore over the next 5 years. Other key highlights included number one, significant operational process improvement that the company has managed to ensure. Also, vendor as well as customer negotiations that have ensured ever since the takeover, and also rationalization of cost overhead, again ensuring that operational costs have come down quite significantly. Goldman Sachs has come out with a note on Adani Ports post this operational update of Krishnapatnam Port. Number one, what they are saying is that improvement in costs has been quite meaningful. The company has managed to ensure a 300 crore improvement as far as EBITDA is concerned within a period of 9 months, and EBITDA margins has improved from 54% in Jan 2020 to 70% in October 2020. Now, what Goldman Sachs is saying is that the company's dominance as far as India's sports sector is now even stronger, and the market share too has improved quite meaningfully to 25% from 21% earlier. So keep an eye out for Adani Port. Some very strong commentary coming in as far as Krishnapatnam Port's update is concerned.
Thanks, Vivek, for that update. Hpcl also continues to be in the limelight. Fifth day on the trot, fuel prices continue to rise, thus touching a 2-year high level. How will these hikes impact the margins for OMCs like BPCL, Hpcl, etc.? To analyze the same, earlier in the day, our managing editor Nikunj Dalmia caught up with MK Surana, the CMD of Hpcl. Here's an excerpt of that conversation.
So as such, the marketing spread do not get substantially varied between just because the prices have changed in the market or something like that. Now, the complication is because we determine the domestic pump prices based on a rolling basis of a 15 days average. And therefore, if you just calculate probably day to day, you may find a variation between what it should be versus what it is. But if you see in a long-term basis, it does get aligned to a stable marketing margins. And it is not which somebody may feel that just because the prices have gone up, the oil marketing companies are making a huge money. That doesn't happen like that. There is a margin for the marketing companies to ensure that the product gets distributed across the length and breadth of the company, and the cost which we incur in distributing and selling these products across the countries. And you should also appreciate that the cost of distributing these products across the country is not the same, depending on the distance it has got from the producing location, that the difficulties of making it reach to the far-flung areas, to the hinterlands, etc. So there are some bases in which it is determined. Some of that, it has got a legacy the way when it was in the control pricing and when there was a homogeneity, so that it doesn't happen that in one area you pay huge difference, hugely different price compared to other places, apart from the local taxation which has got.
Couple of weeks ago, you announced a buyback at a massive premium to the price, and it is still at a massive premium to the current price, current trading price. Yet your stock is not getting re-rated. Why is that?
In fact, yes, that's true that sometime back we announced a buyback, and that was probably we are the first PSU company to go from a market transaction basis rather than the tender route. And I have said at that time that we wish to create the value for the shareholders. And we thought that buyback is one of the mechanisms to do that, apart from the other tools like dividends, bonus, etc. Now, after that, it has been taken very positively by the market, that you have also said, and that is what many of the people have commented, that probably it was a different way of creating values for the shareholders of at least the PSU stocks. And after that, there was an uptick on Hpcl share prices and the PSU share
Slipping into a break here, more on the other side. Keep it with Buy Now, Sell Now.